Now that it seems like a U.S. debt default has been averted, have we managed to stave off an economic downturn? To gain insights, let's delve into recent economic data. Welcome to RealPage Economy Express. According to Census Bureau, total building permits declined 1.4% month over month and 21% year over year in April, while permits in the multifamily sector fell 7.7% month over month. Our forecast indicates that approximately 612,000 units will enter the market within the next 12 months. Considering the significant influence of building permits on our supply forecast, the downward trend in permits suggests an impending deceleration in construction activity. On a similar note, NAR's latest report showed that existing home sales dipped by 3.4% in April, totaling 4.3 million units, making a significant 23.2% year-over-year decline. Pending home sales remain steady from the previous months, but experienced a notable 20.3% year-over-year drop. On the other hand, the recent Case-Shiller Index report suggests a potential housing market recovery, with the national composite index increasing by 1.3% in March. However, this recovery appears uneven, with Florida markets experiencing gains while West Coast markets witness declining home prices. In a positive development, first quarter GDP received an upward revision, with the second estimates showing growth of 1.3%. While non-residential fixed investments saw positive adjustments, residential fixed investment experienced a downward revision, primarily due to a decline in improvements. Furthermore, the same report revealed a 0.4% increase in the core personal consumption expenditures price index for April, or 4.7% over the past 12 months, slightly exceeding economists' expectations. While this morning ADP reported that the private sector employment grew by 278,000 jobs, way more than 180,000 expected, most of those additions were in the leisure and hospitality. Also, the latest JOLTS report revealed a persistent high level of job openings. However, the number of employees voluntarily leaving their current jobs declined to 2.4%. Now, this shift in sentiment was also evident in the May Consumer Confidence Index, which dropped to 102.3, and the Consumer Sentiment Index experienced a nearly 7% month-over-month decline. Now, the upcoming job report on Friday holds significant importance, as it will determine whether the job market's weakening pace aligns with the Federal Reserve's expectations. With persistent inflation and rising home prices, a strong jobs report would leave the Fed with limited option but to continue raising rates, potentially resulting in further economic slowdown. Thanks for watching, and we'll see you all in 2 weeks.